Hi, I'm Jenefer Hughes. I'm the Commissioner of the Revenue. Thank you very much for coming to watch this recording. Chesterfield County citizens this year saw an increase in their tax bills, which is quite unusual. We're still suffering the effects of the COVID pandemic in the global economy, and our supply chains are still disrupted. Now, how is this relevant? Well, it means that new car manufacturers are struggling to get essential components. They're unable to meet the demand for new cars, and as a result, taxpayers, people, are going to the used car market in order to replace or buy a new car. That means that if your vehicle is 5 years old or less, your car is now in high demand. And as a result, when demand outstrips supply, prices go up. And that situation has affected the valuation of your vehicle, which is key to how we assess your vehicle for tax purposes. Let me tell you how we assess vehicles. So, in accordance with the Constitution, so it's Article 10, Section 2, requires the Commissioners of the Revenue to value vehicles at fair market value. The Code then elaborates and describes the assessment method that we use. So that is Section 58.1-3503, Paragraph 3. We're required to use a recognised pricing guide and to choose one of three values: the retail value, the trade-in value, and the loan value. In Virginia, the recognised pricing guide is the J.D. Power official used car guide for the Eastern region. No other pricing guide is considered a recognised pricing guide. And in Chesterfield County, we use the lowest of the three values. We use the loan value. So at the end of January, my office starts performing a mass valuation using the J.D. Power values. We upload those into the system, validate, and we completed that process on February 9th this year. Following on from that, just as we do every year and required by law, we send you a return of tangible personal property which shows what we assessed your vehicle at. And you have the opportunity to comment or send back any additional pertinent information. That process was complete on the 9th of February. On the 10th, I provided the Board of Supervisors with an analysis which showed that our total assessment increase for vehicles was $22 million. The Board of Supervisors quickly took action to relieve that and chose to use what you remember hopefully as the Jim Gilmore car tax relief legislation. You can find that in Section 58.1-3524 in the Code of Virginia. Typically, every year, the county receives $41 million from the state in order to relieve car tax for Chesterfield County citizens. There are a couple of boundaries in the law, however, which affected many of you. Firstly, car tax relief is only available for vehicles that are driven for personal use. Secondly, car tax relief is applied to the first $20,000 of your assessed value. So for those of you with a vehicle that was assessed at higher than $20,000, your maximum car tax relief this year was $396, which was higher than last year, where the maximum car tax relief was $331. That totaled $23 million in relief returned to citizens to mitigate the increase in assessment. The Board of Supervisors also chose to reduce the vehicle license fee, which is normally $40, by 50%. And so on your tax bill, you will see your vehicle license fee at $20 for every vehicle instead of $40. That was an additional $7.5 million that the Board of Supervisors returned to citizens. Now, I understand that an increase in tax bill was unexpected. You have the right under Section 58.1-3980 to appeal your assessment. Instructions to do that are on chesterfield.gov/comrev, which is my part of the website. If you click on personal property taxes on the left banner and then appealing your assessment, you'll see the instructions there. We are taking a look at every single individual appeal, and we're going through the assessment process all over again. Please make sure you provide us with information regarding, say, your mileage in order for us to evaluate whether we can provide you with a high mileage assessment. I know that this situation was completely unexpected. We are living through unusual economic conditions. Inflation is up and prices for goods and services are increasing, which had a direct impact on your real estate and vehicle taxes. At least with real estate, you expect the investment in your home and therefore your real estate taxes to increase. You buy a vehicle expecting it to depreciate as it gets used and therefore to decrease in value. Unfortunately, the law requires a different valuation method, which in 2022 resulted in an increase in vehicle tax assessments. For more information on my office's operations and the 2022 vehicle tax assessment process, please visit my website at chesterfield.gov/comrev or email us at cor@chesterfield.gov. Thank you.